Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario on the daily time frame, where we're looking for a bigger three-wave corrective structure, after which we expect continuation to the upside. In wave A, we have a finished leading diagonal, a 5-wave structure. In wave B, likely a finished 3-wave structure to the upside, hitting the 886, which is still a common target for wave B, taken from the high to the low of wave A, and then we're looking for a wave C to the downside, an impulsive structure to move below the low of wave A. The invalidation of this scenario is price taking out the high at 73.8k. Inside wave B, we are then looking for a 3-wave corrective structure to the upside in an ABC or a WXY. In both cases, the common target area for your C and Y is the 1 to the 1.236 trend-based fib extension, taken from the low to the high to the low, which, as you can see at the moment, is very nicely respected. On the 15-minute time frame, this structure to the downside plays an important role in the probabilities of the scenarios on the 15 minutes. So this structure to the downside looks to be an impulse 1, 2, 3, 4, 5, which means we have to label it a wave A, wave C, or a wave 1. If this is a wave C, it has to be part of a flat structure or a zigzag. In a zigzag, we need a wave A, B, C, but clearly we don't have a wave A. So therefore, this wave C has to be part of a flat structure in a wave A, B, C. Inside B, we do have a diagonal in a potential A over here, for then a B and a C to the upside in a bigger A, B, C. However, the issue here is that your wave C in that case didn't take the low of your wave A. 3 wave A, 3 wave B, 5 wave C to the downside didn't take the low over here of your wave A, which means that it then becomes a running flat ABC, and a running flat is very rare, decreasing the probabilities for this to be a wave C, increasing the probabilities that this is a wave A or a wave 1, which in turn increases the probabilities to sooner or later still take out the lows. The first scenario I therefore like to present to you is a double 1-2, where this structure is labeled a wave 1. We have a finished blue wave 1, finished blue wave 2, where the blue wave 2 retraced to the 05 Fibonacci, which is a common target for a wave 2, and then we're looking for a wave 3, 4, 5 to the downside. Inside wave 3, we're then looking for another 1-2. A finished wave 1 in white, looking for a wave 2, and then continuation to the downside in a wave 3. The resistance above price is the daily naked point of control at 70k inside the common target area for your wide wave 2, which is the 05 to the 786 Fibonacci, taken from the high to the low of this wave 1, giving you a target between 69.9k and 70.3k. As you can see, the 05 has already been touched, but the daily naked point of control is always interesting resistance. The second scenario is a scenario where this move to the downside is counted as a wave C in then a running flat. We have a wave 1, a bigger wave 2, and then continuation to the downside in a wave 3. However, this scenario has lower probabilities compared to this scenario over here, simply because of counting this a wave C instead of a wave 1 or a wave A. Here we then have a wave WXY, looking for price to move up into the bigger resistance that we have, the blue box here, 70.8k to 71.1k, which also includes another daily naked point of control at 71k. After that, we then want to see an impulsive structure to the downside in a wave 3, moving below the lows over here that we have at 68.9k. An important detail on the chart is the 886. This is taken from the low to the high over here of this first structure to the upside. And if we're looking for impulsive continuation to the upside in a wave 1, 2, and then eventually a 3, 4, 5, the 886 is decreasing those probabilities, as the 886 is rare for a wave 2, common for a wave B or a wave X, which increases the probabilities that all of the price action after is corrective, which in turn increases the probabilities to sooner or later move to the downside to take the double bottom. The bullish scenario on the 4-hour time frame is that we're looking for an impulse to the upside in a 1, 2, 3, 4, 5, where the common target area for your wave 4 is between the 236 and the 05, taken from the low of 2 to the high of 3, giving you a target between 69.1k and 66k. Inside this target area, we have some additional support between 66.1k and 67.1k. After wave 4, you're looking for continuation to the upside in a wave 5, and the invalidation is price taking out this high here at 65.5k, because a wave 1 and a wave 4 should not overlap in an impulsive structure. Yesterday I had a short conversation with Vlad where we were talking about this structure, and he had some good points indeed. One of them is that this wave 3 is indeed very short. A common target for wave 3 is the 1.618 trend-based fib extension taken from the low to the high of 1 to the low of 2. Wave 3 commonly is the strongest, most extended wave in an impulsive structure where the 1.618 is usually hit, but the minimum requirement for wave 3 is that it is not allowed to be the shortest wave in an impulse. Well, it isn't the shortest wave because this wave 3 is longer than your wave 1, but it does of course have a little bit of an impact on the probabilities that the wave 3 didn't actually move higher and stopped at the 1.236, which is a target for a corrective structure in a wave C or a wave Y. That is also what I wrote down here as point 2. Prices ranging in the common target area for a C or Y, which is between the 1 and the 1.236 trend-based fib extension taken from the low to the high of 1 to the low of your wave 2. The double 1-2 for wave 3 is also a little bit awkward because the second 1-2 is bigger than the first 1-2. So on the lower time frames we have a 1-2 in blue, and then inside wave 3 we have another 1, 2, 3, 4, 5. This second wave 1 is bigger in price compared to your first wave 1, not in time though, and your wave 2 here is bigger in price and time compared to your higher degree wave 2, even though this is a lower degree 1-2. 1, 2, 3, 4, 5 in blue is the higher degree count, and then inside wave 3 this is a lower degree 1-2, but the lower degree 1-2 is bigger than the higher degree 1-2, which is not really something that you like to see. It's not an invalidation, but it impacts probabilities. We also have some bearish CVD divergences over here at the highs, which I will show in a second later in the video, and below price here we don't have too much support. If we drop below this low again, the next area of support is pretty much between the 382 and the 05, so we have to see how quickly price would move towards that area, because if locally we have a 1-2-1-2 and we get a big move down, we should push through that support very easily. However, if we do start to range on support, that would be more bullish, where we can then look for price to move towards the upside. The first bullish scenario on the 15-minute time frame is a WXY, where we have a zigzag in wave W, complex structure in wave X, and we're looking for another zigzag to the downside in a wave Y, moving towards that support area at the lows. Common target area for your wave B is the 05 to the 886, taken from the high to the low of your wave A, and as you can see the 05 has been hit, and we have that resistance area, the daily naked point of control, at 70k. After B we expect a wave C to the downside, finishing a wave Y, then we want to see price move back towards the upside. The common target area for your wave Y is between the 0.618 and the 1.236 trend-based fib extension, which gives you a target between 68.9k and 67.1k, with the 1.618 being an extension target at 66k. The second bullish scenario would be a bigger WXY with again a zigzag to the downside in W, a bigger complex structure in wave X, and then a wave Y to the downside. If we then look at the CVD divergences, we had bigger bearish CVD divergences here. These played out when price moved to the downside, and we had again a bigger bearish CVD divergences here, but also played out as price eventually took out the low. As price started to range here, we created some bullish CVD divergences. These have now played out, so locally the CVD divergences are neutralized, and we better just wait for another range to form and more clarity as price continues to give us more information. So if we then finally look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities at the moment are quite neutral between a wave 1, 2, 3, 4, 5, or this being a 3-wave structure and a bigger retracement to the downside. The probabilities for the bullish scenario are seriously affected by the points that I mentioned earlier in the analysis. However, I prefer to keep an eye on local price action for the probabilities on the 4-hour, which is what we see over here. On the 15-minute time frame, the probabilities at the moment are higher to sooner or later take out the low that we have over here at about 68.9k, where we also have that 886 touch. Generally, the probabilities are higher that the move to the downside is not yet finished, corrective or impulsive. Also, you got that 886 touch at the low. If price takes the local lows, we'll take it from there and observe the reaction to see if on the 4-hour time frame it is more bearish or more bullish, right? If we finally take this low over here in a very bearish scenario, you want to see strong continuation in a potential 3, or if it is more bullish where we do move to the downside but eventually find support, start ranging sideways, increasing probabilities for price to move towards the upside at a later stage. If price can move impulsively on volume through resistance to the upside that we have over here around 71k, that is the moment we can start flipping the probabilities locally. But at the moment the probabilities would be higher to still look for more lows over here instead of moving towards the upside unless you pass the resistance at 71k on a high amount of volume. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.